Telegram became the largest validator for the Ton blockchain, and we got a technical upgrade. The number of transactions is going up, and with it, the price. The question is, how much longer can this rally last? Let's have a look at the on-chain metrics, the data most people aren't looking at, to try to figure out what's going on from this point onwards. Ton has been one of the best performers in the altcoin market this week. The price more than doubled, and the time to finality on the Ton blockchain is now even faster than on the Binance Smart Chain, or on Avalanche, or on Solana for that matter. This is a tweet by Pavel Durov, the founder of Telegram. And so that's all over the news, including the validator changes and the high staking APR. We're going to talk about staking in a second. But then there are also the potential red flags, the tokenomics, as in the unlocks, $103 million worth of token unlocks. Will that push down the price? Hi, my name is Gerhard. I've been in crypto for the last 8 years. I hit my first million 3 years ago. And in this video, I want to share the data points, how I decide whether or not to buy or sell an altcoin. And we're going to look at Ton this time. Most people here on YouTube are not willing to share their performance data, but this channel is different. This is my monthly alpha over buying and holding Bitcoin over the last 5 years. That's then how that looks like over time. Again, the portfolio measured in Bitcoin. And so we started a copy trading pool last year that outperformed Bitcoin. And this year we are outperforming again. Now, what about this tokenomics scare for Toncoin? Ton is already inflationary. There are new tokens getting allocated towards the Believers Fund, and the real bump of inflation will happen in February of next year. So still another 9 months from here. The real issue is that the total value locked, the TVL on the Ton chain, has a hard time growing. Yes, recently it's growing, but that's because the Ton price itself is going up, and many assets on the chain are of course also linked to Ton. The app fees are relatively steady, but they are not growing either, so that means probably not that much more usage. Here is the stablecoin market cap on the Ton blockchain. This chart starts in June of 2024. Also, not necessarily constant growth. Now, this is a Ton price in US dollars, but I don't like to look at those US dollar charts because there is a lot of correlation within crypto. I think it's better to use relative valuations. This one, for example, this is Ton relative to the others market cap. Now it makes sense why Ton topped out over here, because that's when relative to other altcoins it topped as well. Also the bottoming, it's easier to explain on the relative valuation chart versus the US dollar chart. Why did we particularly bottom here? Again, because it aligns nicely comparing Ton relative to the rest of the altcoin market. Now the dotted line that we see over here, that's the equilibrium price. So that's the Ton price was relative to the rest of the altcoin over the entire time period. And we are approaching that equilibrium very quickly. And there might not be that much more upside, maybe another 10% or so. In the past, we did, however, go through that equilibrium all the way to the top, right? We did not turn around directly at that level. That would thus put Ton's potential upside from the current price relative to the rest of the altcoin market to 150%. Roughly. What's the downside if we suddenly unexpectedly turn around? It's minus 50%. Now, since Ton is inflationary in nature, and since it's not clearly growing, looking at all kinds of metrics, it's no real surprise that Ton relative to Bitcoin tends to long-term rather trend down. And that's a fundamental issue, right? When we buy something like Ton over the very long term, over many years, we want to get more performance versus Bitcoin. We take on more risk and more volatility, and that should also be compensated with more performance. But unfortunately, for the vast majority of altcoins, including Ton, the additional risk is not compensated with additional return. Yes, we do have our rallies every now and then, but over the years, if you just connect those two bottoms, we had an underperformance of 75% over 3.5 years roughly. But of course, short term, many things can happen. We are at 7 billion market cap. The top was at 25 historically. The technical upgrade did bring more transactions, That's probably trading bots, arbitrage trades, etc. But we've also seen a change in the staking APR. So is this potentially an opportunity to take advantage of a long-term TON position where we get 22% APY? That's a big question, right? Because this is the number of TON over time. 1 year ago, we were at roughly 200 million TON. Now we are at 346 million TON. So the number of TON is growing faster than the staking return is. And that matters, right? It's the same kind of fraud that the governments make. They increase the money supply by an average 6.8% per annum, but usually government bonds, they pay less than 6.8% per annum. So in the end, if we just hold bonds long term, we tend to lose purchasing power. And the same is true here, right? The staking APY is lower compared to the expansion of tons over time. Now, what about the short term? We have, again, during rallies like this, more trading volume on the bets on the price, on the perpetual futures, compared to the spot market. The spot market has 235 million worth of trading volume. The perpetual futures market has 1.3 billion. And that trading volume is still going up, meaning there is more and more attention on the token and more speculation. The funding rate is positive, so most short-term traders still bet on a rising price. The perpetual futures believe in the rally. They don't think that this is just a pump and dump. And so even though the price is going up very, very quickly, the number of liquidations across long and short is relatively balanced. Unfortunately though, the open interest is also very high. So a lot of the buying pressure just comes from the perpetual futures. And anybody that wants to hold an asset long term does not necessarily do this via the perpetual futures, because perpetual futures cost funding on average 11% per annum. If we trade in and out very quickly, then the transaction cost, then the spread matters. And so if our time horizon is very short term, we use perpetual futures. If we want to buy something in order to hold it over many years, it's better to do so via the spot market. If we have now all of this demand via the Perps, not via the spot market, that means that we've got a short-term inflated price. Now, I don't know when the price inflation will come back down, but there's clearly correlation, right? When there's less bets on the price, when the open interest goes down, then the TON price itself tends to go down as well. And so if open interest normalizes again, and it's currently at 700 million, and with normalization, I just mean it comes back down to earth, then that would also mean selling pressure on the spot price. Simply because of arbitrage bots, simply because of balancing out both markets. Now, as usual, I've also run a backtest for the best golden and deaf crosses for TON. This comes now from Bitcoin Strategy Analytics, the backtesting platform on this channel. I've checked the fast and slow moving averages, the best combination. That's over here, that data point, which is the 28-day versus 61-day simple moving average. So when the faster moving average crosses the slower moving average, we get a golden cross, we get a positive signal. In the opposite direction, we get a deaf cross, and we should be betting on falling prices. That approach outperformed buying and holding TON quite a bit. Here we've got our equity curve. We're just going long and cash. We don't even bet on falling prices. And here we've got our strategy in Toncoin. If we also bet on falling prices, we get an even better return. Let us crunch the numbers. Let's have a look at the chart. Here it is. Buying and holding TON is the line in gray, and the performance using those two moving averages is the line in blue. So that means instead of 41% per annum, we get almost 100 percentage points more than that with the 28-day and the 61-day simple moving average. Where are we right now? Let's have a look at the live chart. That's the signal. It came on the 20th of April. And of course, with the recent rally, we stay in our bullish phase. It's not a perfect approach. It does have its failed signals, but generally it tends to run relatively well, at least historically, right, over all of those data points. The 28 and 61-day simple moving average historically used to work the best for Toncoin. And so it's very dangerous to bet on falling prices of TON right now. Very often after a rally like this, we tend to see some continuation, and then only once the price appreciation slows down, then comes the death cross, and then we turn around. The short-term momentum clearly is still bullish for TON. But again, that's short term, and we are still below the equilibrium, TON, relative to the altcoin market. But it's unlikely that it's going to outperform the rest of the alts by more than 150%. This is a quite well-respected resistance. By the way, if you want to backtest your own assets over here, we've got a new feature. So that has been announced just over here. You can now add any asset to Bitcoin Strategy Analytics. Just click over here. You can search for any obscure asset, let's say shuffle. You just click plus and it imports this into Analytics. You're not anymore limited just by the assets over here. Everything on CoinGecko and on Yahoo Finance is available now on Bitcoin Strategy Analytics. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time here on YouTube or see you in Premium. Cheers!